Darren, he got murdered.
Oh, man.
Yeah, he got murdered in Chicago. It's terrible. You know, I was waking up one day.
Oh, man.
It's a rough one. And I don't talk about this publicly often, but I appreciate you bringing it up. You know, in life, we always have these moments where we meet an individual who becomes a mentor. In the case of Darren Joss, he was my boss. He was the first gentleman who had me on his desk as a professional trader. You know, I'm from Chicago, and Chicago's known for the pits, the Chicago Mercantile Exchange, the Board of Trade, Chicago Options Exchange. It's a historically recognized city for financial markets, right? Yeah, so I was waking up to go to work. I was like, Wednesday afternoon, I used to wake up at 6 p.m. to show up for my 7 p.m. shift. And I get a phone call that, there's ambulances in front of Darren's place and what's going on. So, long story short, he left us far too soon. Yeah. But what he did is he gave me a tool set and a couple other people. He was very impactful for a couple other traders who went on to be very successful. But he gave me a tool set that I could carry on in life and build with, right? So this book is dedicated to Darren. Wow. And then, that math I talk about, that basic algebra on how to make a market and how to get these spreads working together and find some edge in futures and options. I wrote a book on that. That's my second book. That second book's called Building Statistical Arbitrage Trading Strategies. And I wrote that book to put Darren's mind into the public sphere, okay? Yeah. And a lot of that stuff that I talk about in that book, we would say with quotes, we would say they're industry trade secrets that most people aren't going to talk about in public, right? Because this is how you can really build some very sophisticated... It's your alpha, right? But in honor of Darren, I wanted to put that in the public sphere. And anyone who's curious about building statistical arbitrage trading systems, go read that book. Read this book, Bitcoin Options book too. But if you're serious about building stat arb, I put Darren's work on paper, and it's for everyone to enjoy and to learn from at this point. These books are energy transfer mechanisms, right?
Yeah, it's his brain and mind and thoughts, imparted on you, and then now you've imparted that to this book, and now other people can benefit and experience that. It's very cool.
Exactly.
Right?
I saw that commodity markets were really how the world facilitates and talks to each other, how we move energy amongst each other, how we move, everything we do in our lives is basically coming down to a commodity market.
Welcome to Cypherpunked, a podcast dedicated to exploring the intersection of privacy, technology, and freedom. I'm your host, Matty Ice, and today we're diving deep into the world of Bitcoin options and their impact on the broader cryptocurrency ecosystem. Joining us is John Devine, a veteran of both traditional and digital finance with over 20,000 hours of trading experience from market making at the Chicago Mercantile Exchange to leading digital asset OTC trading at Blockfills. John is a crypto author, speaker, and advocate for blockchain technology. John, welcome to the show. We're excited to tap into your expertise on everything from the evolution of Bitcoin options markets to the potential for Bitcoin to reshape the global financial system. Welcome.
Well, thank you very much for having me. I'm sitting in this studio and I'm just blown away. I mean, whatever you've done here, you've done extremely well. I feel good. Happy to be here.
Got to give kudos to the man behind the all of the controls back there. He set this all up and built it out, and he did a fantastic job. So good job, Paul.
Thank you, Paul.
So I didn't realize you wrote 3 different books, and I'm hoping to have you back. I'm going to read all of them, and we can go down the rabbit hole and discuss those and do like a long form series talking about all that. But I did crack open your 3rd book, and I saw you dedicated the book to, I think it was Darren Jarris. Who is that?
Yeah, Darren Joss. Actually, I appreciate that you're opening with that, because it's something I don't often talk about, and unless it's prompted on me, I feel comfortable maybe exploring it. So, in life, we always have these moments where we meet an individual who becomes a mentor. And in the case of Darren Joss, he was my boss. He was the first gentleman who had me on his desk as a professional trader. And the story on that is, I'm from Chicago, and Chicago's known for the pits, the Chicago Mercantile Exchange, the Board of Trade, the Chicago Options Exchange. It's a historically recognized city for financial markets, right? And as I was growing up, always saw something in markets. I wasn't sure if I wanted to be a trader, but I saw that commodity markets were really how the world facilitates and talks to each other, how we move energy amongst each other, how we move everything we do in our lives is basically coming down to a commodity market. And so the industry fascinated me. And when I got out of grad school, I went to school to study energy systems and fuels management. And when I thought I was going to, get into the energy grid and maybe work at a power plant or at, some type of renewable energy technology facility. That was kind of what my vision was coming out of school. But Chicago just kept pulling me back. And so what I did was I went down to the Chicago Board of Trade every day, basically for 3 months after grad school. I was looking for work, handing out my resume to traders who were coming out of the pit, reaching out just to my network a little bit, but just kind of putting everything I had to try and find a path. And, starting from zero, no connections, right? A gentleman named Darren Joss comes into my life through this exercise of just persistently, knocking on the door at SIBO and at the Board of Trade. And so Darren hired me. He was a massive precious metals trader in Chicago, massive. And we call these guys locals. That term's kind of gone now because the floor is gone. And everything's electronic. But Darren was a true local in Chicago. He was a guy who would make a price, a bid and an offer for futures markets in precious metals. And he hired me on to cover the Asia hours and the European hours.
So late at night.
Really late.
Middle of the night, baby.
Really, I mean, I would start Sunday at 5 p.m. Central Time, 6 p.m. Eastern, and I would stop Friday morning at 7:30 in the morning.
Yeah.
So I would do 12 hours overnight, covering the book, and then the U.S. hours guys would come on. But anyway, the point is, the reason I dedicated the book to him is, as I was saying, we all, come across these pivotal people in our lives who kind of show us the way, in a sense, towards the mission we're trying to accomplish. And Darren was that guy for me. He taught me, the fundamentals of a forward curve. He taught me how markets work together, how spread markets work, how to look for algorithmic execution opportunities, how to build strategies that can provide liquidity and a service to the exchange and to market makers and participants who are active on that exchange, and create real edge. And it all came down to some actually very basic algebra. And so I wanted, Darren, the story gets a little bit south at this point. Darren, he got murdered.
Oh man.
Yeah, he got murdered in Chicago. It's terrible. I was waking up one day.
Oh man.
It's a rough one. And I don't talk about this publicly often, but I appreciate you bringing it up. Yeah, so I was waking up to go to work. It was like, Wednesday afternoon, I used to wake up at 6 p.m. to show up for my 7 p.m. shift. And I get a phone call that, there's ambulances in front of Darren's place and what's going on. So, long story short, he left us far too soon. Yeah. But what he did is he gave me a tool set and a couple other people. He was very impactful for a couple other traders who went on to be very successful. But he gave me a tool set that I could carry on in life and build with, right? So this book is dedicated to Darren. Wow. And then, that math I talk about, that basic algebra on how to make a market and how to get these spreads working together and find some edge in futures and options. I wrote a book on that. That's my second book. That second book's called Building Statistical Arbitrage Trading Strategies. And I wrote that book to put Darren's mind into the public sphere. Okay. Yeah. And a lot of that stuff that I talk about in that book, we would say with quotes, we would say they're industry trade secrets that most people aren't going to talk about in public, right? Because this is how you can really build some very sophisticated. It's your alpha, right? But in honor of Darren, I wanted to put that in the public sphere. And anyone who's curious about building statistical arbitrage trading systems, go read that book. Read this book, Bitcoin Options book too. But if you're serious about building stat arb, like I put Darren's work on paper and it's for everyone to enjoy and to learn from at this point.
I saw a quote the other day about books, kind of like how you can almost like go back in time and see people's thoughts and hear what somebody that was maybe 1,000 years ago, what they were thinking. I thought that was a really interesting quote. And it's cool stories like this where you can see the butterfly effect in action, where you've got someone who's no longer even on this earth, but the effect he had on your life and how you're passing it on now to someone else's lives and other people. That opportunity, I think, is really cool and really powerful.
That was the goal. That's why this book's dedicated to him. That's why I wrote the second book, to put his mind in the public domain. And really, his mind is now available for anyone who wants to go seek it out.
Wow. Man, we're getting deep early. Let's just call it. We're done. We've got the great stuff, the good stuff.
Well, it comes back to it's energy transfer.
Yeah.
Right.
Yeah.
Which is, we're going to get into that with Bitcoin.
Yeah.
But at the end of the day, these books are energy transfer mechanisms, right?
Yeah.
It's
his brain and mind and thoughts,
yes,
imparted on you. And then now you've imparted that to this book. And now other people can benefit and experience that. It's very cool.
Exactly.
Right? Wow. That's an interesting thought.
Yep. So thank you, Darren, for all you did, and everyone who can go read that book. I hope you like it too.
Awesome. That's an incredible story. Thank you for sharing that, John.
Thank you. Yeah.
So let's go back to the basics. What is an option? Let's just talk about that, because this stuff gets so confusing for people, and even highly intelligent people I see all the time are like, oh, what's I think Nick Carter had a tweet about this the other day where he's like, all this option stuff or whatever is just maybe over my head, or I'm very confused by it as well, right? I have a little bit of an understanding, and we've had conversations about it. We talked about it at the Bitcoin Nashville conference and had some talks about it, but actually implementing these strategies and utilizing this to benefit your business or your investment approach, whatever it may be. I think let's start at the fundamental building blocks. What is an option? Why would somebody want an option? Who does it benefit? To different sides? Explain that.
Yeah. So options, the way I view it in terms of Bitcoin is, if you're going to do the work on Bitcoin, which takes tremendous amount of work, quite frankly.
Yeah.
Okay. It takes hundreds of hours, in some cases, thousands of hours of studying Bitcoin to really wrap your head around it and understand where we're going and why this thing is so impactful for us all, right? If you're going to do that work, and we conceptualize Bitcoin as an energy transfer mechanism in a sense, the next step to that is understanding risk transfer mechanisms. Okay. And options contracts are risk transfer mechanisms. It's a way to utilize a derivatives contract to transfer risk on an asset that you own or that you have in your portfolio, and define risk parameters that align with your investment thesis and your risk tolerance. Bitcoin is an extremely volatile asset. Everyone knows that. You look at the chart, you zoom out, you say, oh my gosh, this thing is volatile, right? It's actually one of the reasons that it's an attractive asset for speculative traders in a sense, because it moves, right? But given that implied volatility and that elevated volatility, for people who are going to start accumulating Bitcoin into their portfolio, they may say, if I'm going to have this high vol asset in my portfolio, what am I doing to define my risk on this asset? Okay. Because even if we buy into the long-term message, which makes a lot of sense to me and to nearly everyone I come across who does the work on Bitcoin, that Bitcoin's going a lot higher in US dollar terms. That being said, how do we stomach some of these price moves that can happen to the downside? And we can do that with options. So, let's talk about the basics. There's two types of vanilla options. There's a call option, which gives the holder the right to own the asset at a predetermined price at a predefined expiration date. And the best way to give an example of that would be, currently it's October 2nd, 2024. So we're looking at the October options market for Bitcoin. Options expire on the last Friday of the month when we're talking about monthly options. So with Bitcoin trading at about $61,000 right now, if I think about call options, the right to own the asset at a predetermined strike price at a predetermined expiration date, the expiration date we're talking about is October 25th, the last Friday of the month. But now the strike prices can be anywhere from 61,000 all the way up to 200,000. Okay. So I'll give you the specific example. Right now, you can go buy a 69,000 strike call option that expires on October 25th, 2024. And that gives you the right to own Bitcoin at $69,000 on that expiration date. And you might just say, like, well, why would someone do this? And there's implicit leverage in that position. It's also less capital intensive to take that position rather than buying one Bitcoin at $61,000, right? And it gives you that same, or a similar profile for upside reward where Bitcoin to trade higher. That's where I like to start with options. So like if you weren't comfortable buying Bitcoin at $61,000 right here, you could look to buy a call option. It's less capital intensive and you still get exposure to the asset, right? My favorite way to play call options with Bitcoin, however, is to sell them. Okay, so I just gave you an example of buying a 69,000 strike Bitcoin call option that expires on October 25th, right? That gives me the right to own the asset. But if I sell that call option, because there's always, for every buyer, there's a seller to have a transaction, right? So someone's long the contract and someone's short the contract. When I sell that 69,000 strike call option that expires on October 25th, I'm now obligated to sell my Bitcoin at $69,000 on October 25th, 2024. Okay. Why is this interesting? This is interesting from a risk management and a real yield perspective. I'm a holder of Bitcoin and I want to create cash flow in Bitcoin, by the way, or dollars, but typically Bitcoiners will take Bitcoin as cash flow. When you sell that 69,000 strike call option, which you are now obligated to sell your Bitcoin at 69,000, you get paid a premium. That option buyer is going to pay you for the right to own your Bitcoin at $69,000. Okay. Now, the question is, what's the probability that Bitcoin goes to $69,000 before October 2024, right? As we speak, that option is considered a 20 delta option, meaning the market is pricing in about a 20% chance that Bitcoin goes to that price on the expiration date. Okay. So if you're a holder of coin and you're looking to create cash flow on your Bitcoin, by meaning making some Bitcoin every month by selling options, that's a very interesting strategy for you to take a look at. Because at the end of the day, were you to be fulfilled on your obligation to sell Bitcoin at $69,000 on the expiration date, you've made money.
You're still making a profit.
You're still making money, right?
Yeah. So Bitcoin's trading at 61,000 and you owe that Bitcoin at 61,000. So the price goes to 73,000. Yeah, you're going to miss a little bit of that upside, but you're still going to make from 61 to 69 a profit. Plus you've been compensated for that option contract, I assume, as well.
Exactly. You've been paid a yield for that option, right?
Yeah.
Okay. So that's the underlying concept from the call option perspective. Okay. There's buyers and there's sellers. All right. And those each have unique profiles depending on where your risk appetite is. The other side of the options market is the put options. And put options grant you the right to sell your Bitcoin at the strike price on the expiration date. Okay. So let's think about this. Bitcoin's trading at $61,000. There's a lot of chaos in the world right now. We got stuff going on in the Middle East. We got this strike on the East Coast with the dock workers, right? There's macroeconomic volatility, which can have short-term impacts on the price of Bitcoin.
Especially risk assets.
Exactly.
For sure.
And Bitcoin is a risk asset right now. We are still in the adoption phase of Bitcoin. It is a risk-on, risk-off asset for financial markets as we speak today. So let's say you do some analysis on the world and you say, wow, it's an interesting time. And I'm not so sure that this time is conducive for price appreciation or at least significant price appreciation. You might ask yourself, I want to buy some insurance. I want to buy insurance that guarantees me a price that I can get out of my Bitcoin at. Okay. And this is what put options provide. Put options are the right to sell your Bitcoin at a predefined price on a predefined expiration date. So I'll give you the example. Right now, the let's call it the roughly 20 delta put option is the 54,000 strike put. Okay. So Bitcoin's at 61. I can go buy that 54,000 strike put option. That grants me the right to sell Bitcoin at 54,000. Let's say we flush to 48, right? I have the right to sell at 54. Okay. I'm going to pay a premium for that right to sell at 54, but at least now I have some insurance. Okay. And if Bitcoin were to trade lower from 61, it doesn't even have to go all the way to 54. But if we were to trade lower, let's say to 57, the price of that put option is going to increase and you're going to have a profit that you can potentially lock in by then selling that put option back to the market if Bitcoin were to trade lower. Right. So that's the concept. And then as I'm talking to you about the buyer of a put, right? There's a seller, okay? And that seller of a put option is now obligated to buy Bitcoin at 54,000 on October 25th, 2024, okay? And the seller of that put is going to get paid a premium for selling that option, okay? So this takes me to, we've covered why you would buy a put option. You want some insurance on where you can sell your Bitcoin. But let's say you wanted to buy more Bitcoin, okay? you can go buy Bitcoin at $61,000 right now in the spot market, or you can sell a put option, which now obligates you to own Bitcoin at the strike price on the expiration date. You get paid a premium for selling that put option, and you already want to buy Bitcoin anyway, right? Mm-hmm. So now, thinking about it from the seller's perspective, I'm obligated to own the asset I want to own anyway. I'm getting paid a premium up front to do that. And now I'm providing insurance to the marketplace and helping liquidity build in a derivatives market for the fastest growing commodity in the world.
Fascinating. Let's take Alice and Bob, and let's take them as two individuals, and let's explain who Alice would be, who Bob would be, why one would want to own a put, one would want to own a call.
Sure.
Let's kind of like hammer this out a little bit, and let's explain why maybe that scenario is good for both parties and how it really benefits the market.
Yeah, I think I go back to, everyone has to make their own decision on their portfolio allocations. Mm-hmm. Maybe you're a younger person and you have a wider risk appetite because you have time as a catalyst for you. Maybe you're someone who's later on in life and you want to be more conservative, but you still want portfolio exposure to this asset. Okay, so let's take Alice is someone who has more time and they have a wider risk appetite for the asset. Alice is probably going to be a buyer of call options. Mm-hmm. They want to see if Bitcoin rallies, how can I enhance the gains on Bitcoin going the way I think it's going to go?
Okay.
I can just buy spot Bitcoin and make dollars 1-to-1 on the tick moves, right? Or I can buy call options, which have implicit leverage.
So maybe maybe Alice is a investor who wants to either, she has alpha that says the price is going to move up. Maybe she has a trading strategy, or maybe she just likes to speculate and gamble.
Yes.
And then maybe let's have Bob be like for example, I'm in the mining industry. Why would I benefit from this as a miner? Let's make Bob a miner.
Yeah. So Bob's a miner. Alice wants to buy optionality because she has a thesis on the market and she thinks Bitcoin's going higher and she wants to express that with some leverage. So she's a buyer of options. Bob's a miner. He produces a commodity asset. He has a fixed input cost, which is predominantly his electricity bill. Mm-hmm. And he has to figure out what price can he sell Bitcoin at to make a profit margin that's suitable for his business, right? So Bob is a candidate for being a seller of call options when the arithmetic makes sense on his profit margins. So again, going back to Bitcoin trading at $61,000, Bob may look at his balance sheet and say, hey, if I sell Bitcoin at $69,000 this month, that's a good thing. Like I make my profit margin. I'm providing network security via my mining operations. Mm-hmm. Because when Bob sells that $69,000 call option, he's obligated to sell Bitcoin at $69,000. Okay. Mm-hmm. If we were to get there, right? And Bob's going to get paid a yield, and that yield may beef up his business model.
Yeah.
And may help cover some of his cost to produce Bitcoin. Right. So that would be the distinction. There's also a scenario where Bob, as a Bitcoin miner, he may need to sell spot Bitcoin to cover his electricity bill because the electricity company is still not taking Bitcoin as payment. They need dollars.
Yeah. So
he's got to liquidate some Bitcoin for dollars to pay his bills. Bob may also be a buyer of call options in that scenario as a hedge, because now Bob has sold Bitcoin in the spot market to cover his electricity bills. Mm-hmm. But maybe Bob's thesis on the market is that he doesn't really want to sell Bitcoin. He's a forced seller to cover bills. Yeah. So how can he still have some upside exposure to the asset?
I feel Bob's pain.
Yeah, there you go. Right. And a lot of us do. So Bob can then say, I'll sell spot Bitcoin to cover my bills, but I'm going to take some of that sale proceed and buy options, which are less capital intensive. If you're the further out of the money you go, the further away you go from the at the money strike, which we call at the money strike, would be the 61,000 strike in our scenario. Bitcoin's trading at 61,000 strike is at the money. Bob may say, I want to buy that 69,000 call because I just sold spot Bitcoin, but I still want to have upside exposure to the asset for the next 30 days. Right?
Gotcha.
That's the idea.
And say Bob sells a call option to the market, and say the price doesn't go above 69,000, doesn't get exercised.
Yep.
Bob still holds his Bitcoin, doesn't have to sell it at $69,000, and he gets paid for offering that contract, right? So it's additional revenue.
That's correct. That's exactly it. And again, the example I'm giving you is what we call a 20 delta call option. The market is saying it's about a 20% chance that we go to that
1
price.
in 5 times he's going to liquidate at 69 and lose some upside. But the other 4 times he's just getting free money because these contracts aren't going to get called essentially.
That's the theory on it, right?
Is there a way for a miner to play both sides of this, to sell call and put options where one would cancel the other? Or is that would I be at risk of, say, the price being super volatile, go down, I get exercised here and then get exercised up here and not have the funds to compensate?
You're already over it, right? Like you're seeing it. So instead of Bob being a call seller and a put seller, more often a miner in Bob's scenario would be a call seller. And instead of taking that premium as yield, he would then take that premium and buy protection, buy put options, and often at zero cost.
I got you. Okay.
So the example I'm giving you here, where Bob can sell that 69,000 strike call option that expires on October 25th, he can then go buy that 54,000 strike put for zero cost. He's using the premium he earned from selling a call to buy insurance to lock in a sale price.
And let's walk through this one more time, how that would play out in a catastrophe or bad scenario for Bob. Yep. He does exactly what you mentioned. He sells, the call option and then buys the put option. Yep. Walk us through what would happen. The price goes down, how he executes his put. Give us that one more time.
Yeah. So in traditional finance, they might call this a zero cost collar. In my book, Bitcoin Options, I call this strategy the optimized hodl. Yeah. Okay. And the reason I call it the optimized hodl is because you're long this asset, Bitcoin, at $61,000. You have an obligation to sell at 69 because you've sold a call option at that strike price for the October expiration, which is October 25th. But what you've done now is you've bought protection. You've bought the right to sell your Bitcoin at 54,000. So if you think about it, Bob's opportunity cost is if Bitcoin settles above 69,000 on October 25th, he will lose out on any gains above 69,000, right? But in exchange for that opportunity cost, he's locked in a sale price. He can for sure sell his Bitcoin at 54,000 on October 25th. Okay, gotcha. So like the ideal scenario to the upside is something we call pinning the strike, is if Bitcoin were to settle at 68,999 on October 25th. Right? Yeah. He captured every bit of juice to the upside he could, right up to his strike. We call that pinning the strike, as I just said. And then if you look to the downside, Bob's position, short calls and long puts, are gonna have positive P&L if Bitcoin were to trade below, start trading lower. We put this position on at Bitcoin 61,000. If Bitcoin were to go to 50, 60, 59, 58, Bob's going to have positive P&L. And he can close that position whenever he'd like. But oftentimes a miner will leave that position on because they want to be able, they don't know where price is going. They're happy to be locked in to sell at 54 and the obligation to sell at 69, and they'll just let the market play out. Yeah. But in practice, there will be positive P&L as Bitcoin trades lower towards that put strike from 61,000.
Fascinating. Yeah. Very interesting. As a former market maker in derivatives, how do you see the role of options evolving in the Bitcoin market? Is this similar to traditional commodity markets, or do you see a lot of evolution here? What are your thoughts?
This is the best question. Unfortunately, no one knows. Yeah. But we can give our best shot to understand what can happen here. So, we're talking about options, and options are interesting in Bitcoin because of what we talked about, the implied volatility. Bitcoin moves up and down. Yeah. And we're in this adoption phase, and we all understand that, and we're prepared, and we're ready to hold on for dear life, or hopefully that's the position you're taking on this asset. Anyway, point is, what is the impact on the Bitcoin marketplace because of options? And now we're seeing, the big news this the past couple of weeks was options being approved for BlackRock's Bitcoin ETF, right? That's big news. The Chicago Mercantile Exchange already has Bitcoin options. We're seeing a lot more regulated venues start to get options. Obviously, the offshore market is still the largest marketplace for Bitcoin, and then of course the over the counter market, which is what I'm involved in at Blockfills. But the implications seemingly are there's two scenarios. Options are going to accelerate implied volatility because a lot of people are going to come in and start buying them. And the more demand for options, implied volatility rises. That's scenario number one. Okay, hey, I think Bitcoin's going to 100,000. instead of just buying spot, I'm going to buy a bunch of call options and try to leverage that return. And hopefully I get the timing right for expiration, et cetera. Okay. The second scenario is that more people will start doing what I'm talking about with Bob and start selling options to generate yield and to use these contracts for what they were really designed for, which is to manage risk and generate real yield. In scenario number 2, were people to start selling options, what in theory would happen is that the implied volatility would constrict. And Bitcoin would start going from a chart that looks like, the peaks and troughs are so extreme, that high implied volatility. If people start selling these options, that chart's going to start to look much more normalized. It's going to start to look much more like the S&P 500, for example, or a commodity that's not nearly as volatile. And this has long-term implications for Bitcoin as, the different types of use cases that we've identified as store of value, a medium of exchange, et cetera, hard money, right? Hard money benefits from lower volatility as people become more comfortable accepting it as a medium of exchange and holding it on their balance sheet. They're not worried the price is going to fall out, right? Those are the two scenarios. My opinion is that as these options markets become more mature, easier to access, more people start to study them and put positions on. My opinion is that initially we're going to see buyers of options. People are going to want to have exposure on a leverage basis
to the
next bull run, right? And that's potentially going to be a major catalyst for the next bull run. I take you back to the stock market, and the easy example to bring up is GameStop. And we all remember GameStop, and it just went through the roof, right? Yeah. I mean, moves that you couldn't really, you couldn't imagine. It
didn't make sense.
Didn't make any sense, right? And the big reason GameStop moved like that was because of call options. Okay, there's something called a gamma loop. That's like a very off term. There's probably a more professional way to say that, but the idea is that if a bunch of market participants start to go buy out of the money call options, in Bitcoin terms, let's say they start to go buy a bunch of 100,000 strike call options. There's a market maker who's selling that call. There's a market maker selling that 100,000 strike call option to all these speculators or hedgers or whatever you want to say they are in the marketplace. When the market maker sells that 100,000 strike call option, they have to go buy Bitcoin to hedge because they're now obligated to sell Bitcoin at 100,000. Okay. And they're dynamically hedging, meaning if you buy 100,000 strike call option and Bitcoin's trading at 61,000, the market maker might need to buy 0.1 Bitcoin per contract, right?
Yeah.
But as Bitcoin
starts to go up, they gotta
buy more. And then they got to buy more.
The price to go up even more.
And then they got, right? And
so that's the gamma loop.
It's this gamma loop.
I like that.
Exactly. And this is, people are kind of talking about this, but it's not as front and center as I think it maybe should be. Because this, we talk about God candles in Bitcoin, right? And we really haven't had a massive God candle.
It's coming. We just don't know when.
It's coming.
It's coming.
Right? But we haven't. And there's a whole bunch of market participants that have come into Bitcoin and they have never experienced a God candle. Yeah. Okay. And this development in the options market is likely to be a major catalyst for an event like that to the upside.
Gotcha.
That's the initial instinct, right? From there, people will, I'm assuming, catch on to the idea of generating yield through options and managing their portfolio risk profile with options. And that should, in the long run, constrict implied volatility. But the thesis is that implied volatility spikes first. People become buyers of options first. Yeah. And then they become sellers.
Are you guys seeing that like on BlockFil's end? Are you seeing more demand for this call option sort of creep up over time as we get closer and closer here to into the halving, past the halving, as supply dries up? Are you guys seeing that?
What we're seeing is, BlockFil's is an institutional market maker, and a lot of the market participants who interact with us, they're professional risk managers. Gotcha. They're approaching this market really
in a more professional way.
And what I mean by that is they're selling options.
Gotcha.
Right? They're looking to generate yield. They're looking to define risk while they're long. They want to be able to lock in a sale price.
Gotcha.
Right?
Gotcha.
These types of players are less inclined to be that speculative like bullet in a sense.
So you guys are mostly institutional. Do you take any retail at all?
We don't take any retail.
Oh, okay.
Yeah, we don't take any retail trading. Yes. So that's,
I was going to ask you if you saw a difference there with institutional, or do you have access to data that shows retail action here? Or
you can, and when these IBIT options become active, that market will become very public and you'll be able to see it in real time. But just the flows you can see in these offshore exchanges, which are retail driven,
like Binance and stuff like that.
Yes, like a Binance. They're very speculative, and that's the buyer of the option. And not to say that there aren't reasons or institutional participants that will be buyers of calls. Certainly there are. I think what got this market going and that initial liquidity was, from an institutional perspective, was not so speculative focused. It was, wow, I own Bitcoin and I can sell that 20 delta call option that expires in 30 days and annualize an 18 to 25% return.
Gotcha.
That's what became interesting, right? And really, these derivative markets are what... You remember back in 2020, we all used to say, 2019, 2020, 2021, we would say the institutions are coming. The institutions are coming. It was like we were beating a drum, and that was the beat, and that was the lyric.
It seems like they're here now.
They're here.
Yeah.
But what if we look back over the past couple of years? What was that major draw? Aside from doing the work on Bitcoin and understanding the protocol and the technology, and then, of course, coupling that with like the fiat disaster in terms of the debt spiral and all that. And okay, great. But what was the major catalyst? I hate to keep saying that word, but it's appropriate to get that institution in. And it was the derivatives market. There was Paul Tudor Jones, when he came into the market, that was like, you flip the switch. Now, if you're not looking at this, what are you doing, right? When Paul Tudor Jones came in, that was a massive time. And he was coming in around the time where a very interesting trade was developing. It was called the basis trade. And I think we've talked about this before, but the basis trade is when you're looking at the forward curve of Bitcoin. That you have the spot price. Spot price is 61,000, right? But then now, what's the price of Bitcoin to be delivered on October 25th? What's the price of Bitcoin to be delivered at the end of November, the end of December? This we can have a curve, right? Because there are markets for Bitcoin to be delivered in the future, and we call these futures markets or forward contracts.
Yeah.
One of the most interesting trades that pulled Wall Street into this market, even guys who weren't understanding the tech, but just the trade and the market structure, was buying spot Bitcoin and then selling a forward contract. Because the forward structure was trading at a significant premium to spot.
So you could just lock in that.
You could lock in again. You buy it. Let's just
buy it at 60 and deliver it at 70 in 3 months.
Go. And you collect that spread.
You're guaranteed. You already own it.
Yep. Yes. Yep. So like these derivative markets, and that's a fascinating trade for a risk manager, right? You have dollars. How do I deploy my dollars to beat inflation? Oh, I can buy spot Bitcoin, lock in a forward sale, capture the spread. You have counterparty risk. That's the big risk in that trade. But generally speaking, that's a Wall Street approach to financial markets. That goes right with options. That's what's bringing in this sophisticated capital, and I think it's going to continue to do so.
Interesting. So, from my understanding, I mean, this is obviously super bullish for liquidity and efficiency in the market. Do you see any downsides or any drawbacks here? Like, what's the bear case for options and stuff? These markets evolving on Bitcoin. I feel like I've seen certain aspects of crypto Twitter saying we don't want this financialization. Yeah. We don't want that. I mean, obviously, very, very. On the outer reaches, but I still see some posts and stuff like that.
100%.
What are the drawbacks here?
100%. And there are real drawbacks. Okay. Bitcoin was born out of the great financial crisis. Okay. It is a anti-regime asset. All right. And when we started banging the drum in 2019, 2020 on the institutions are coming, and I think there was a little bit of a desire for those who were already in Bitcoin to almost be proven right in a sense. Until you had the Chicago Mercantile Exchange list a futures contract in December 2017, the asset was just so far out of left field. You weren't getting the mainstream attention on it. You can't have price.
Any mainstream attention was negative.
Yes.
There was no legitimization. Yeah.
Bingo, right? So you were almost looking and I mean this in a human sense, looking like for some validity from Wall Street. Like, hey, we're not just crazy over here. We are changing the world. This technology does change the way that humans interact with money. And we got some validity, right? And now we're getting a lot of it. I mean, you have BlackRock has launched one of the most successful ETFs in the history of ETFs. But, let's press the pause button there, right? Because at the end of the day, Bitcoin is an opt-out lever from the system, okay? It is not supposed to be integrated in the system. It is supposed to change the system, right? And what makes me nervous about these derivative products, and I'll include the ETF in that, is that it's gonna make it so easy for people to just buy an ETF in their brokerage account that they skip doing the work, right? And at the end of the day, not your keys, not your coin. Okay. You're giving custody of your Bitcoin in the ETF scenario to the likes of Coinbase and BlackRock.
Counterparty risk. I used that earlier.
Yes. Yeah. And also those, and maybe not Coinbase, but BlackRock is the counterparty who is at the center of that world that Bitcoin really came out of the ashes from, right? In 2009. So we need to be very careful. And we need to be welcoming, and when I say we, I'm of course not speaking properly because Bitcoin is for everyone.
That's exactly, that's what I love about Bitcoin. Bitcoin is for everyone. Yeah,
so take that for what it is. Bitcoin is for everybody, right? Yeah. So BlackRock can go make an ETF. State Street and all these other banks, they can start to custody this stuff, right? Like, that's great. It's for everyone, but at the end of the day, we are here to change the world and not conform into the old world as they see opportunity to kind of jump on the bandwagon in a sense and make some money. And what's funny, when those guys think about making money, they're seeing dollar signs, US dollar signs, right?
Yeah.
But you and me aren't seeing
we're seeing sats.
We're seeing sats.
Yeah.
Right?
We're just thinking about it differently.
We're thinking about it completely differently. And so this is the big concern, is that if we have this financialization, in quotes, of Bitcoin, will that make it so easy to on-ramp into your portfolio that you skip doing the work and figure out how to set up a cold wallet? And maybe you're not doing the cold wallet because you need a little something else and you're not doing a tri-party agreement with someone who's a Bitcoin native entity. That's what I'm nervous about, is that as the institutions have arrived, they will make it so easy to access that they will custody the Bitcoin on your behalf. And it's just like owning a stock in your brokerage account. Yeah. And that would be a shame. And probably for the majority of people, remove that desire to learn, which I think at the core of Bitcoin, it's mind expansion. Okay. And figuring out how to go from a low vibration approach to energy transfer to a high vibration approach. That's the concern.
What about market manipulation? Do you ever hear about that? Like, what are your thoughts there?
Yeah,
do you think it helps create a more fair and robust market, or do you think that it just creates another opportunity to manipulate markets? And especially with again, I think over the long run, it's a good thing. But in the short term, with a newer asset and a lot of volatility, a lot of opportunity, we kind of talked a little bit about it, but just maybe give me your thoughts.
Yeah, and this is where liquidity becomes a very important topic, right? And at the end of the day, as Bitcoin has been developing, if you go back even 4 or 6 years, there were some major players in Bitcoin who could move the price. Okay, like we all saw that as the market was becoming a marketplace, you could tell that there was some sophisticated participants that could move price up and down in a coordinated fashion. And that's, you can look on chain at some of that data, right? Yeah. It's not a secret. And so how do you attack market manipulation? It's part of this natural growth phase of the asset class. Bitcoin needs to be distributed, right? You have, you go back 10 years ago, Bitcoin was much more concentrated in terms of the number of people who had it, right? And now it's, as price appreciates, those early adopters begin to sell some Bitcoin and distribute it to the marketplace.
It's pretty cool to see that in action, yeah.
It's extremely cool, right? But it leads to the idea of, at what point in this adoption phase of Bitcoin, does liquidity become diverse enough and risk management tools become easily accessible and liquid where there isn't the risk that a cabal, in a sense, could tank the price of Bitcoin 10% a day and flip the algos and, kind of control trend? That's still not quite clear, although I think at this point with Bitcoin's market cap where it is much harder to coordinate that way. But this, again, is the importance of risk management, liquidity discussions, and understanding, the natural trajectory of a new commodity in the marketplace for interacting in that commodity.
Yeah, I largely agree with pretty much everything you said. It's a question I get at our Bitcoin, not in relation to just options itself, but more so just in Bitcoin itself. Is a lot of our meetup newcomers that come to the meetup, they're like, well, can't this just be manipulated? Can't this be manipulated? Yeah. And I explain to them, the idea of a blockchain and the transparency there, and you can kind of see. Yep. And yes, somebody can tank the price once, but once that happens, the price goes down, and then new buyers can come to the market, pick up that cheaper asset, people that are sophisticated, or just new people that want to buy in at a lower price, and then that supply gets distributed, and they can't do that again, right? And that's the beautiful part about it. You can really see all the holders and hodlers and people that are participating with the blockchain, which is super cool.
That's the best part, right? And going on that point a little bit, those historically we've seen this type of action, and you've seen it, and who that type of action was bad for. What's bad for everybody, but at the end of the day, it's really bad for short-term traders. Who that action is actually very helpful for someone who's dollar cost averaging into the asset, which I recommend. Yeah, right. That's what we push to everybody that comes to our 100% and just dollar cost average. Dollar cost average. Not going to outsmart people like you and people that are doing this for a living and the Darrens of the world. Exactly. Yeah. Exactly. So you want to own this asset. And you're not a professional trader, but you're a portfolio allocator. It's so important. You need to be dollar cost averaging in this asset. And I tell that to every single person that comes to our meetup. Yes. That's the only question. What do I do? How do I do? Yes. Dollar cost average. So identify the fundamental value there, that there's a value in this asset class, and allocate just over time. Bingo. And when Bitcoin is, you look at that 200-day moving average of Bitcoin, you can see when it goes on sale, and you can see when it gets a little bit expensive, right? And you can make some decisions around that. For sure. That's what I would say in that sense. And dollar cost averaging also lines up really well with cash secured put selling. We talked about when you sell a put option, you're obligated to own the asset at the strike price, but you also get paid a yield. So if I was a dollar cost averager, I may take, I may split up that initial cash. I have US dollars. I want to deploy it into Bitcoin. I may take, let's just use easy math, 50% of that dollar and go buy spot, but I'll take 50% of that cash and sell a put option that's collateralized with that dollar that I have as to be deployed. Now I get paid a yield and I'm obligated to own the asset. Okay. What if that price doesn't get hit? Can you still exercise and own the asset at that price? No, that's you just get paid the yield. And then you can take the yield and invest that into Bitcoin. Yes. And then this is where you can make a decision. How aggressive do I want to be? If Bitcoin is at 61,000, I can be less aggressive and sell the 54,000 strike put that expires in 30 days. It's only about a 20% chance I get assigned, but I get paid a yield. And if I do get assigned, I bought Bitcoin cheap, right? Yeah. Or to be more aggressive, I can sell the 60,000 strike put option or the 61,000, the actually at the money put, right? Which is going to be significantly more expensive, and it's going to earn me a greater yield by selling that at the money option than selling a option that has only a 20% chance of being in the money. What do you see when it comes to regulatory developments for Bitcoin options markets? What's, is there anything you like? Are there any challenges you see right now? How do you think that's going to play out? This is a tough one. I don't, if you zoom out and look at like the progression, the Chicago Mercantile Exchange launched a regulated futures contract in December of 2017. Okay. About 7, they also have options on that future. I don't exactly remember when the options came live on the futures, but it was a couple of years later. 7 years after the CME gets a contract approved, and also the Chicago Board of Options Exchange and a couple other regulated exchanges. 7 years after that event, we now have these ETFs. Okay. And I think
I always thought that was kind of wild how they approved like options speculation on this before supporting the spot thing. I'm like, what are these people doing? It just never made sense to me.
There's a lot of things that don't make sense when it comes to government regulators.
Yeah,
this is definitely one of them, right?
Such a waste of taxpayer time and money fighting all this stuff. This SEC's done. I mean, this is a travesty.
It's ridiculous.
So much money, time. I mean, they've done the complete opposite of what their mission is, right? Do me a favor, Paul, pull up the SEC's mission statement. See what their mandate is. They've got 3 mandates. And I will make the argument that they failed at all 3 of those mandates and actually are doing the complete opposite for the market.
Can't disagree there.
Yeah. But in the meantime, let's hear your thoughts on this.
Yeah. So just the history on it, that these 2017 is a massive deal. And 7 years later, we get these ETFs. Okay. And now it hasn't happened yet. Now, seemingly, we're about to get options approved on an ETF. In theory, and if there was logic at play, the next step is to now look at the actual Bitcoin in kind, actual sats and that marketplace. And how do we regulate derivatives that are collateralized with actual Bitcoin? Bitcoin options that the underlying asset is actual Bitcoin, not dollars.
Yeah.
The CME and these futures markets, if you're trading there, you're depositing dollars and you're withdrawing dollars. Okay. These ETFs, they are not big. It's an ETF. It's an exchange traded fund. It's not actual sats, right? Even though they're custodied by the agent. But at the end of the day, what's in your portfolio is an exchange traded fund.
Yeah.
Okay? It's not sats. And what should have happened first before futures and ETFs, but obviously that's not how it played out. But when we get to the actual meat here, what's interesting is derivative markets that are collateralized with Bitcoin.
Isn't that how derivative markets are supposed to work, right? Isn't that like...
Well, yes and no.
I always thought like if you were, for example, my like early understanding of this was like if you were say your corn was the commodity and you were a farmer doing corn, you were obligated to deliver this contract and it had to be the actual physical corn. And that's,
let's go on that. Okay. Because this is why Bitcoin's absolutely fascinating. Mm-hmm. Okay. So you talk about a traditional commodity like gold or corn. To settle those futures contracts, you actually have to ship the gold or the corn, right? And that's a labor intensive process, and it's inefficient and all. Most oftentimes in gold futures and corn futures, those contracts settle in dollars. They don't actually move the corn. They don't actually move the Bitcoin, or the gold, right? Mm-hmm. Because it's very inefficient to move those assets. Mm-hmm. And this is, why we
interesting.
We poked holes in gold, right? Why is Bitcoin a superior asset to gold?
Yeah.
Because gold sits in vaults of banks, it's very hard to move the asset, right? But
it's very hard to move it through space, right? Scalability through space is difficult, right?
Bingo.
Which is what caused it being prone to all this centralization, which issued notes off of it, which brought us to the problem of where we're at today.
Exactly. Couldn't say it any better, right? So now we get to
there we go. Here's the role of the SEC. The U.S. Securities and Exchange Commission has a 3-part mission: protect investors, right? They've been protecting investors from the best performing asset in all of human history. I mean, isn't that funny? It's just like you see all the investors just pour into the ETF now that they have access, right? Maintain fair, orderly, and efficient markets. Well, was it efficient that all these capital allocators couldn't allocate to the best performing asset in human history? The second the ETF launch, it's the best performing asset. It's the best performing ETF launch, I think. What is it? The best performing one in human history, in history as well. I mean, so all these investors were just waiting to come in, and it's like they literally gaslit everybody. They had to get sued in court. They wasted millions of dollars of taxpayers' money, time, etc., and facilitate capital formation. I mean, they've been pushing all of this investment overseas to other markets, to shady exchanges, whatever it may be. When all this capital formulated so fast when they had access. I mean, then they had to literally get sued and lose in court to get us here. I mean, I would get rid of this whole. I would get rid of the SEC. I think they've betrayed what their mission actually is.
And you're speaking like a true Bitcoiner, aren't you?
I am. I mean, I think it's ridiculous. The fraud on the American people and the fraud on the system from this, it really is a travesty of justice. And, there should be some accountability, but Gary Gensler still has his job, right? So shame on him too, because he taught a class at MIT, and if you go look at all the stuff he taught, I mean, he's just literally a year or two ago, he's saying all this stuff, and now he's contradicting every single thing that he said. Yep. I mean, that's the ultimate, hypocrite, the ultimate sellout. So shame on you, Gary.
That's a rabbit hole if you're looking to go down. Yeah, that Gary Gensler rabbit hole. It's shocking.
It is shocking, right? Because it's not like he doesn't know. He knows. Yeah,
this guy knows.
Hey, let me just say this a year ago when I'm teaching the class, and then now I've got power. Well, fuck you. I'm going to abuse it, right? I mean,
from what I can tell, Gary wrapped his head around smart contracts and blockchain technology before a lot of academics. Yeah, and he was really a fighting force in a sense with his classes at MIT.
It's a shame. I mean, it's
power begets
the things
power.
People do to I mean, it's just he should have had some integrity and just told Elizabeth Warren, hey, look, I appreciate you nominating me, but these are my positions. This is what I truly believe. But instead, he's just been a hypocrite and a sellout, essentially.
Yeah.
Right? I mean, it's a shame.
I'm sure history will unveil some of the backstory as to what's happened here, but in current times, it doesn't really make a lot of sense.
Yeah.
But going back to our discussion on commodities and the futures markets, as risk management tools, a lot of those tools are generally settled in dollars. They are. You can lock in your hedge, and you're capturing your P&L in dollars. For example, let's say I'm a gold producer, and I'm gonna produce X amount of ounces of gold this month. I might sell a call and buy a put, which means I'm obligated to sell my gold at the call strike, and I have the right to sell my gold at the put strike. I might put that trade on to lock in a profit margin on the gold I'm going to mine.
So then you kind of just know you're in this range. You're going to finish it. If a black swan event occurs and something happens, you might not capture the upside. But also, if a black swan event goes, it's like
I'm not going out of business.
Exactly. You can be in this.
Yes. So they might put that trade on, right?
Yeah.
But they're going to do that with dollars. Mm-hmm. Okay, and they're going to lock any P&L in dollars, and then they're going to sell that gold in the spot market. Mm-hmm. That's often how it happens. And so that they'll get the spot market price of gold at the end of the month, but they've put a hedge on in the futures markets that has positive P&L where the price of gold to go lower, and that offsets the price they sell in the spot market. Anyway, the reason I'm saying that story is that's gold miners using dollars to hedge their gold product, right?
Yeah.
With Bitcoin, since we can settle Bitcoin
super easily,
efficiently, and we can move it across the world in exactly in
seconds,
minutes. Yes, barely anything on a relative basis, right?
Let's just say under an hour, the whole contract can be settled.
There we go. Okay,
depending on whether you're operating on Lightning or whether you're operating on the main chain or whatever.
Yes.
But roughly 10 minutes, the contract will be settled.
There we go. So with that in mind, and that efficient settlement process and that finality of settlement, it now allows us to rethink commodity markets and how these contracts are collateralized. And so with Bitcoin, if I'm a Bitcoin miner and I want to sell a call option, I shouldn't have to collateralize that call option with dollars.
Yeah.
No, I should be able to post, let's say I want to sell one call option. I should be able to post one Bitcoin that collateralizes that call option, or maybe you get margin from your venue and you can post 0.25 of that one and you can self-custody the rest of it until expiration, right? Anyway, the point is, I should be able to use actual Bitcoin to collateralize a short call option or a long put option. Yeah. Okay. That is the actual essence of what these contracts are trying to do. And we just, historically, we're not able to do that because of the inefficiencies of settlement on these physical commodities.
And it's so interesting too, because this is, we're talking a lot about Bitcoin, but there's other blockchains that will allow more efficiently for doing like RWAs and real world assets, where you could actually collateralize those RWAs and do it that way too.
Definitely.
Which is super interesting.
This is where when I talk about this stuff, and of course the book's called Bitcoin Options, so I'm talking about Bitcoin, right?
Yeah.
But I am it's too early in this adoption cycle and this technology cycle for me to put the blinders on and only look at Bitcoin, right? There's other blockchain applications that are super interesting.
Yeah.
And options and risk management strategies can be applied to those.
It just adds efficiency to moving, commodities and exchanging,
100%.
Very interesting.
Yes.
Can you explain the concept of max pain in options markets and how it might apply to Bitcoin? How should investors interpret something like that?
That's a great question. Okay, so let's think about let's build a story here a little bit. So it's the beginning of October. And when I'm talking about options, I'm going to speak about monthly options, which expire at the last Friday of every month. But there's also daily and weekly, and there's even hourly options if you really get into it. But those are not risk management tools, quite frankly.
Those are just gambling tools.
Those are gambling tools. They are not the purpose of options.
And again, nothing wrong with that. Some people just like to gamble. I mean, we all like to gamble. I like to gamble.
Sure. It's
let people be free, Gary. You hear me?
Exactly.
Let people do what they want.
It's a free market, if you will. But anyway, the options I talk about are for risk management and yield. So we'll talk about the monthly options. You're going to have buyers and sellers of these monthly options. And if you look at the end of the day, the number of people who have traded an option when the day wraps up, they're either holding a position or they're not. And if they've either traded in and out of something or they've traded into something and they're holding it. And if at the end of the day they're holding that option, it's in their portfolio, we can now count that for open interest. So let's use the 69,000 strike call option. Let's say 50,000 contracts traded. Which I'm just making a number up. That's a relatively small number, but just whatever. Just for, say, 50,000 contracts traded today. And at the end of the day, 25,000 were still held open. Okay. Now, the 69,000 strike has an open interest of 25,000 contracts. All right. Now, let's say the same thing for every strike on the board, from the at the monies at 61,000 all the way down to 48,000 and all the way up to 100,000. We can aggregate the open interest for each contract. And then you can start to see, like, where is the market positioned? Okay, there's a lot of people that are holding the 69,000 calls and the 80,000 calls, and there's a lot of people holding the 54 and the 50,000 puts. All right. Now, there's going to be a price where the open interest on the calls and the open interest on the puts expire worthless. And both of those call and put contracts are not in the money. We talk about, like, if it's in the money, if it's out of the money at expiration, you get paid, you don't get paid, right? Max Payne is seeking the price of Bitcoin at expiry that would cause the most of the options on the board that have open interest to expire worthless.
Okay.
And that's what it's looking for.
So that's what Max Payne means.
Yes. And there's market theory that when you have a big options expiration, like a quarterly options that we just had for September 27th, which was the last Friday of September, which wrapped up Q3, right? That's a big expiration because it's a quarterly expiration relative to October, which is just the first month of the fourth quarter, right? Mm-hmm. In September, there's theory that Bitcoin will settle at a price that's going to cause a lot of pain to options holders. That's a market theory, okay? And so people can look at, where is the open interest for this month's options, and at what price does Bitcoin have to settle at to cause most of those options to expire worthless? And that would be one way to approach where Bitcoin prices could be. Now, you back test that thing and there's not much there, quite frankly. But at times that comes into play.
I read that there was actually, it seemed that usually historically September is like a down month for Bitcoin, but this time it feel like it like spiked up at the end. Or so was there a lot of action there? Like, what happened? Was there some in the money options executed?
It's a perfect segue, because what we saw at the end of August and the beginning of September, there's something called skew. And skew is the relative value of call options and put options. Like what's more expensive right now? Are call options more expensive to buy, or are put options more expensive to buy? And when we have positive skew, call options are more expensive to buy than put options. And when we have negative skew, put options are more expensive to buy than call options. And if you want to talk about market sentiment, is the market bullish or bearish? Skew is your metric, because you can judge, okay, market's willing to pay up for calls, it's a bullish market. Or the market is willing to pay up for puts, it's a bearish market, right? Most oftentimes, Bitcoin has positive skew, meaning call options are more expensive than put options. Bitcoin is a bullish asset, generally speaking, all right? The speculative energy is bullish. But at the end of August and the beginning of September, we saw skew go negative.
Yeah.
There was a lot of fear in the market.
Yeah, you can imagine that. I mean, that's, historically, because a lot of people were talking about it. You could hear it in the podcasts and people kind of chattering on crypto Twitter that historically,
44,000 will trade.
Is a bullish, bearish month. Yeah,
could even break 40 and then bounce right back. This was like the big narrative, right? So what we saw in the market was that people, market participants that understand risk went out and bought puts, and they bought so much puts that put options skewed to be more expensive on a relative basis than call options. So when you talk about this Max Payne philosophy, and the idea was that Bitcoin could, fall off a cliff, so to speak, in September. That's why everyone's buying protection. Okay. Well, Max Payne would say, let's not pay these insurance buyers. Let's hold the market at a price that allows those put options to expire worthless.
Yeah.
And this would be an argument for that Max Payne approach to the markets. Like, why did September finish on a relatively bullish or a modest price, given all the fear at the beginning of the month? And it's because the market went out and bought insurance.
Yeah.
And so now, as that market maker churns through the order book, and all as an aggregate market maker, how do they keep that price at a point that allows these put options to expire worthless that they were selling to the buyers, right? And so that's the theory behind it. And that's a great segue into skew and Max.
So did that essentially happen there in September? And was the price? Were there any call options that were in the money for September, or did everything kind of just
not really? The largest open interest for call options for September expired out of the money.
Okay, gotcha.
But and also for puts. Okay, and that's because with Bitcoin we see a lot of open interest out of the money on both puts and calls.
Yeah.
The action is not at the money. It's not at like spot reference 61,000. The action's not really at the money. It's people
speculating on high end
or selling for yield, and that means they're going to that 20 delta option, right, on both the call and the put, or 25 delta, whatever, and they're selling that option or buying that option for their own reasons. So that's the short of it.
Looking ahead, what are the what developments in the Bitcoin options markets and crypto options markets at large are you most excited about?
I'm most excited to see some of these publicly traded miners start to talk about managing risk with options on their investor conference calls.
Interesting.
I think once we get to that, and these publicly traded miners stop acting as proxies to the underlying asset, and they really kind of dig in as a gold miner would, as a crude oil producer would, I think that's going to be another signal to that last remaining hedge fund manager who still views Bitcoin as just an immature marketplace with a speculative asset that doesn't have any intrinsic value. That's the argument, whatever.
Yeah.
If you start to see these publicly traded miners take these derivative markets seriously and begin to talk about it with their investors, hey, we're not just trying to stack as much sats as we can. If that was the play, then just go buy Bitcoin, right? But no, we're trying to mine Bitcoin. We think there's a lot of value in that proposition, but we're also going to be deploying risk management strategies as we understand that this is a 60, 70 vol asset. And we want to protect our investor capital and define margins.
I think we'll probably see that next cycle.
Yeah.
I think this cycle, everyone's just fucking bullish and, stacking Bitcoin like Marathon and a lot of these,
Agreed. And they publicly say this, right?
I think they're doing that to attract investors.
Exactly.
People buy the stock, et cetera.
And that's the fascinating. It's fascinating to watch this play out. And I understand that logic at where we're at today.
Yeah. Have you seen any of these publicly traded companies engage in what you're saying right now?
Yes. And what we've been seeing for the past, let's call it two, maybe 3 years, is just the amount of people that are at the C-suite for these publicly traded companies asking the questions. What's the liquidity like? What's the settlement process like? They're trying to understand the fundamental mechanics of in-kind Bitcoin options. And of course, some of them are actually doing it. But the majority are still publicly stating that they're stacking as many sats as they can. They're not managing risk. They're not selling forward. And I'm most excited about the potential of these derivative markets to kind of usher in a new era of the Bitcoin miner, from just a stack as many sats as I can and hopefully the price goes up, to let's stack as many sats as I can and manage risk appropriately with these tools that we have at our disposal that other commodity producers in the world use.
Interesting. What are still some of the biggest misconceptions you see with a lot of the TradFi guys when it comes to Bitcoin? Is it more around this kind of idea of what we've been talking about, or other things like
the biggest one is the lack of regulation or clear regulatory guidance on in-kind options. The fund managers generally are going to gravitate now towards an ETF because that's what's getting the green light from the regulator. But this is a miss, in my opinion. This is an absolute miss. The conversation should be focused around, how are we going to allow these institutions that are trusted on Wall Street to custody the actual asset, actual sats? How can we build out a derivatives market that is collateralized with actual sats? And how do we get these last remaining fund managers that are still extremely skeptical of the asset to come into the space? And I think you break that down by not steering them to an ETF, because I actually understand the argument. You go talk to these last remaining managers and you say, oh, you can get Bitcoin, just go buy the ETF. Well, what are we even talking about? That you've completely missed the theos and why we're all here and why it's an interesting portfolio diversification asset.
Yeah.
Okay. And so if I go, if I go talk to a skeptical hedge fund manager and I say the way to get in is via an ETF, they're gonna laugh at it. They're gonna say exactly John, the way I buy Bitcoin is through a financial product that already exists for
you lose that that kind of insurance fuck you on the system
bingo.
That Bitcoin has, right? As like
the
this
confiscatability of Bitcoin, the self custody of Bitcoin, the point of Bitcoin, right?
So let's use that as like a segue into the next part of our discussion. You've mentioned Bitcoin as like an opt out from the current financial system.
Yep.
Let's expand on that a little bit more.
Yep.
And talk about why you think that's important.
The debt spiral that we've found ourselves in from, I'm born in 1990. I'm a young man on a relative basis. There's a lot of people in the world, and I'm sure a lot of people listening to this podcast who have seen a lot more.
We're both in the 90s, man.
Yeah, I'm a 90s baby. Yeah. Okay. But what I've seen since my time on this planet is I have seen perpetual spending on warfare, just a nonstop need to print dollars out of thin air and buy bombs and tanks and send troops all across the world and become this global. But I'm speaking from the United States perspective, and really,
it's so funny because this is really what drew me into Bitcoin. This was like reading about this and learning about the world wars and how they detached from the gold standard and how we got involved in World War I and the massive amount of money that was printed and all this stuff. It's like
it's nuts. Yeah, it's nuts. So my entire life, the United States has been spending. The largest piece of our budget is defense. Okay, that's what we spend our money on, and it's not money it's money that's printed out of thin air to pay. It's because it's debt. Yeah, we're borrowing money from future generations to finance a war machine in the present, and that was my first question in this world. Yeah, when I was started to mature and had a bit of a mind that could process information. One of the first questions is, why are we spending so much money on war, and why are we borrowing money to do so? Which, of course, you then take back to, why is that gallon of milk that was 79 cents when I was a kid $4 today? And it's because we're borrowing from the future to pay for the present, and that's depreciating the value of the asset that we currently use to exchange value with each other, which is US dollars. Okay, the second mind-boggling piece of this puzzle that I had a hard time putting together was the over-financialization of the world I live in. And what I mean by that is a 30-year mortgage? What the fuck is a 30-year mortgage? You're telling me to buy a home in the United States, the average person is expected to spend their entire life paying off the debt for the shelter they have to go home to after work every night.
It really is wild. Have you ever seen those charts?
Asinine.
Have you seen those charts of like, I think it's like the 1970s or 60s where like the cost of the house, you look at a cost of like what the house is, and then you put that next to like what the average salary was. And it was like, you know, maybe 2 years of your salary would buy the whole house.
Yes.
And now it's like, oh, can you make this mortgage payment? It's, you know, X% or whatever.
Yes.
You know, and
it is a travesty. It is indentured servitude.
Yeah.
To have to, let's say you start your professional life when you're 24 years old, let's say. Okay, so by 28 you go to buy a house. So you're telling me that house is not going to be paid off until you're basically 60?
Yeah.
That's your whole life.
Yeah.
What? And we've normalized this. It's just like, what do you mean, John? The 30-year mortgage is a great thing. Look at the 30-year bond.
It's like these perverse incentives from the fiat system itself, where people are now using property. I mean, and property's great. Don't get me wrong. You can't print more of it. So it's become a great store of value for people that just don't want to hold dollars because they're going to be debased, right?
Sure.
That's half the game.
And then, of course, that property has a recurring tax bill on it, right?
Course,
okay, we can keep going. But I'm going to pause there and I'm going to go to the next one.
Okay.
Transportation. Okay. Nowadays, you are expected to take out a loan on a car. If you're not taking out a loan on a car, like, what are you doing? What do you mean? You're not paying a lease and you're not paying $500 a month and you're going to pay that for the next 7 or 10 years to own that automobile. And then, the next thing is like layaway. Oh, I want to go buy a TV. Oh, I just have to put down a little bit of money and I can make a recurring payment for that TV or for this appliance. And the point I'm trying to get at is the entire life of an American citizen, and really anyone in the developed world, I'm speaking from the U.S., that's where I am, is based on debt. Everything. Oh, you want to go to school? Oh, okay. So you got through high school, which was funded by taxes, right? Your family pays taxes, okay, and then those taxes are allocated, inefficiently to administrators and teachers and whatever, and you get an education when you're 18. Okay,
I saw the chart today that, and I've talked about this before, but I found that on Twitter today. It was like, it just shows like the administration staff going through the roof,
straight up.
The fucking teacher staff going through the roof. No, teachers are going up too, but not as the administrative staff is going like this.
Okay, on a relative basis.
Are going like this, and like the number of students is flat. Okay. And the performance of students is like this. So it's like, what the fuck is going on here? I mean, the problem is it's just incentives, right? Like there's no incentive based on performance here, right? So there's more money. They just get more and more money for a problem that just gets worse and worse and worse and worse and worse. Seeing this with the homeless population in all these places where, it's turning into this, it's a big racket now where it's like, oh, there's more homeless now. Now we need more money. Oh, it's like just absurd.
It's a loop.
Absurd it's absurd what's happening.
Okay. So
it's broken incentives. I mean, it's just absolutely, broken incentives. And it's so funny you mentioned the car thing, the transportation.
Everything.
I came across the bill, I think was like a couple months ago, and I never got to meet my grandfather. He passed away before I was born, but there was a bill I found of him buying a car. It was like $600 cash. Yeah. And it's just like, it's a 1-page receipt. It was like $600 tendered. It was just like some old like Chevrolet or something like that.
But it's just saving up to buy the car.
Yeah. You just bought the car. Now that car is $45,000.
Exactly.
You better finance it for 5, 7, 8 years. And all this thing. It's just kind of wild.
So to wrap it all together. Yeah. 90s guy you're talking with, all I've seen is the largest piece of our tax base budget goes to spending on the military. And we've had basically perpetual warfare since I've become existing on this
It'd be one
planet.
thing the budget would be a lot, if it was actually defense, the budget would be a lot less, right? I mean, but it's like regime change here, forever $1 trillion, $5 trillion forever war here.
Yes.
We're going to do regime change over in this continent, and we're going to have, all these intelligence agencies that we probably shouldn't even have, that shouldn't even exist, are doing, a coup over here, and they're doing this over here. It's like,
you can't even keep it
we're going to take down, Assad over in Syria, and let's give all these weapons to the rebels. Let's spend trillions of dollars and hundreds of billions and just give it to these rebels. And all of a sudden, we got this new thing called ISIS. Guess what? All those, they have all these American weapons. What's going on? Now the Taliban is riding around in Afghanistan waving, flags, on all of our $1 trillion of equipment. I mean, it's just fucking ridiculous.
They're so good at what they do that anyone who talks like this, people look at you like you're nuts.
Yeah, it's crazy.
And they've
brainwashed.
It's like they've created a way where if you point out the exact flaw, you're looked at as crazy. Yeah. But anyway, the point is, why is this technology? Why is this an opt-out of the system technology? Why is Bitcoin an opt-out lever? And it's because if you want to stop the warfare, you got to cut off the snake of the head.
There you go.
And what is funding the war? It's debt.
Yeah.
That's it. It is the only reason we can play global cop and try to be an ideological game maker across the world is because we're able to borrow from our grandkids. At this point, it's our grandkids.
Yeah.
We used to say our kids.
Yeah.
We're borrowing from our kids. Well, no, now we're borrowing from our it's not even just our grandkids. It's like our great grandkids. Okay, that we're borrowing from. Okay, so we got to stop the borrowing, right? But to do that, we need to completely rethink the structure of our lives. And that's where I bring in the 30-year mortgage, the financing of the car, the financing of the education, the financing of the washing machine and the TV and anything basically that you're buying. The plane ticket now can be financed.
Afterpay or
the iPhone can be financed. Okay. And of course, attached to every single financing ticket is the interest payment, right?
Yeah.
And that is the snake. That is the money that is making money by lending money. They don't actually, if you go back to the laws of thermodynamics, energy can neither be created nor destroyed, only transferred. This concept of interest starts to disintegrate, and you start to realize why the value of the dollar is on a one-way trajectory, downward sloping. Okay, it's because the system is built on a house of cards. It mathematically does not add up. Okay, and there's other people in the Bitcoin community that can say it much better than I am. But this is why we Bitcoin. Because how do you cut the head of the snake off? How do you get people to rethink society without having to rely on debt to survive and to create a foundation for your life?
I expect if the interest rates, a lot of them weren't artificially controlled by a group of central bankers sitting in a room together. I think the interest on a lot of these things would be a lot different, right? You'd get a much more accurate. If you had to lend out your Bitcoin and there was risk attached to it,
yes,
I think you'd get a more accurate risk assessment for that.
Definitely, and that's another piece of this puzzle is that our central bank keeps that interest rate so low, artificially, that we're addicted to borrowing money from our central bank overlords. And that's how we have financed everything. So what does that mean? That means if you hold dollars in your savings account, you're going to lose.
Yeah.
All right. That $100 in your savings account next year is going to be worth 96 cents, or, some people will say 92 cents, right?
Maybe even worse.
Maybe worse,
if you look
right?
at shadow stats and look at historic levels of calculating inflation, and
definitely
they rig the metrics, and they're constantly taking this out or taking that out to make themselves look better. I mean,
it's very friendly on that assessment, and then that's just after year 1, after year 2, after year 5, after year 10, after year 20, the saver gets screwed. Okay. So what can you do with your dollars? You exchange your time, energy, and effort in the form of labor, and that time, energy, and effort is given back to you in an energy transfer mechanism known as a US dollar. Okay. That's what we do with our lives. We go to work, we do work, we get compensated for that work. That energy transfer mechanism is dollars. Now we have a choice. Are we going to hold our stored time, energy, and effort in US dollars, an asset we know is depreciating?
It's getting debased, or they're just stealing your purchasing power from you, essentially.
Bingo. Or are we going to opt out of that system, right? And historically, you've had the opportunity to opt out via gold, via silver, via property. Okay. But we have begun to realize that the gold and the property and the silver is all controlled by these people.
Yeah.
The gold sits in a vault at JP Morgan.
Supposedly sits in a vault. We can't really verify that. We don't really know.
We don't know if it's there. They tell us it's there. We trust them. They're all trust institutions for a reason.
Yeah. Fort Knox. We haven't been able to get into Fort Knox in, I think, 40 years? The public, something ridiculous. We're like,
Yes. And then now the property, you own property, but they're going to charge you rent to own that property, and the rent is a tax, right? Even though you own that you own the
that
deed.
tax never goes down either.
That tax, no, it only goes one way.
That tax goes one way.
And why is that? Because the value of the tax is in dollars, and dollars are appreciating. So the tax has to only go one way, which is up, because the underlying asset is dollars, which is going down. Okay, so let's say you own the deed to your house, but you don't actually own it. You own the gold, but it sits away in a trust. A safety deposit box at JP Morgan Chase. Okay, do you own it? I don't know. Good luck. Good luck, right?
So, I read something the other day, I think it was a year or two ago, actually, where it was like they went into this Canadian vault. I think it was somewhere in Canada, where they went to like test the gold or something like that, and they pulled up one bar, and then they assayed it by testing it, and like they found out that like only the top layer was like actual gold. The rest of it was some fucking like titanium or something else, some other kind of like unprecious metal. And they put the one bar back, and they just walked out, and they never looked at the rest of it.
Look, these people are very smart.
Oh, man.
And on that, what gave birth to the fiat system we know today? It was these trust entities that would take gold deposits.
These trusted third parties.
Yeah,
yes.
trusted third. Okay, let's say
Satoshi hammers on this a lot. If you read the Bitcoin white paper, look back on his writings, is trusted third parties are security holes essentially.
Exactly. Okay, so in a time when gold was the standard mechanism of energy transfer between human beings, people would accumulate gold in exchange for their time, energy, and effort through work. And what would they do with that gold? They could bury it in the ground, or they can go put it in this trust. They will call that trust a bank, right? They deposited that gold in the bank, and the bank said, wait, we have this gold, and we're going to give you a paper note that says, you deposited 1 ounce of gold, and this paper note says that you can come redeem 1 ounce of gold. And now that paper note becomes tradable in society for time, energy, and effort, right? Okay, but the banks got super smart. They said, wait, most people aren't actually coming in to physically redeem their gold. So we can print more notes that say, hey, you have the right to come redeem 1 ounce of gold. Okay, they can print more notes than actual gold in the vault. And that is the seed of the fiat system we live in today. That is that money for nothing. That is that violation of the law of thermodynamics. Energy can neither be created nor destroyed, only transferred, right? When you start to go create energy from nothing, you're being an alchemist. That's where the foundation of the system becomes very shaky. And until Bitcoin, there was no way to stabilize your foundation. You just had to go along for the ride.
Yeah, I mean, and they don't teach you this stuff in schools. You don't learn about Austrian economics in school. You learn about, John Maynard Keynes and Keynesian economics, and you learn
why.
You learn about even the Chicago School of Thought. You learn about that.
Yes.
That's Thomas Friedman.
Yes.
The one asset he doesn't challenge, right? Everything else should be capitalist and free markets, but the one thing he doesn't rock the boat. The one thing he says should be controlled by that should be controlled by the government, et cetera, is money, is that central bank. He goes with the flow, whereas Austrian economics rejects all of that and says
100%.
Every single, money especially should not be controlled. It should be a free market asset. We wouldn't for cans or eggs or goods, we wouldn't try to have a central planner control that. Yet we do so for money. I think is just ridiculous, right? But it's all part of the illusion. They don't want you to question that or think about that, right? Because it's so paramount to the system as we know it. And whether that's intentional or it's more so just the incentives, the underlying incentives of it all, right? Which, again, show me the incentives and I'll show you the outcome. That's one of my favorite quotes, because no matter where you look, you see that structure playing out, right?
100%. And I think, on that point, this is why we've seen a relatively resistance-free adoption of this ETF. Because the ETF happened pretty seamlessly, quite frankly. If you look back on how it happened, there wasn't a lot of pushback. Coming out of 2021, it was only 3 years later we had an ETF. And why was that resistance removed for the Bitcoin ETF? It was because when you go study Bitcoin, actual Bitcoin, you begin having conversations like we're having now.
Yeah.
And the populace becomes elevated in terms of their frequency and how they're talking to each other about energy.
Financial discourse. I mean, you ask most people on the street, what is money? They'll never be able to answer.
Exactly.
They have no
but
idea.
you start to study Bitcoin, and that's one of the questions you can't stop thinking about. What is money, right?
Exactly.
And you get down to this energy transfer mechanism, approach in a sense. So the ETF has been like a Trojan horse, in a sense, robbing the ability for people to sink their teeth into the concept of Bitcoin and begin having these conversations. Because now I can just go buy the ETF. I don't got to do the homework. My friends that are smarter than me told me I should buy Bitcoin. I'm going to go buy the Bitcoin ETF and close my eyes, and that's fine. And I don't got to do any more work. And the conversation stops, and they win.
Interesting take. I'm going to take the counter. Let's have a disagreement here. We agreed on everything so far. Let me take the counterpoint of this, which is, a lot of people who are unsophisticated, I think it's like a gateway drug. For me, it's like, just go buy the ETF, right? Because when you buy something, when you own something, and it's easy for you, right? And like, I own this Bitcoin, I own this ETF now. You start thinking about the asset. You start studying. You care about what you own, right? So for me, it's like almost like this Trojan horse, the opposite way, where it's like this gateway drug. Oh, what does this mean? Censorship resistance, and not your keys, not your coins. What is all this? These are the conversations I get, and the reason I'm taking this thing is because we host a local meetup, and these are the people that we're getting now. We're getting people that are buying the ETF, and they're like, hey, how can I send my Bitcoin? How can I do? You can't send your Bitcoin for what do you mean you can't send your Bitcoin from the ETF? So now they're unsophisticated. They're coming in the door and they're saying, oh, I can buy it here on Coinbase. I can transfer, and we do. Let's set up let's learn about cold storage and learn what a hot wallet and a cold wallet is. So For me, it's the opposite. It's like this gateway drug. And sure, there's going to be tons of people who just, add it to the portfolio allocation, which again, Bitcoin's for everybody. Let great grandma have a little bit in her little thing, whatever. She'll get price exposure. But I also do see it the other way too, where it's this gateway drug for people starting to actually being able to just press a button and buy it. But then you start seeing up, even if you own the ETF, what's going to pop up in your Charles Schwab account or whatever? You're going to see Bitcoin does this, Bitcoin does that, Bitcoin in El Salvador, Bitcoin over here. And it's going to be on your radar now, right? Because you own the asset. You're going to learn and study.
I love that. And I hope you're right. Like, there's
probably a little bit of both, honestly.
I hope that's what happens.
I've definitely seen that.
You're seeing that happen. And I hope that is the scale. I'm nervous that you're coming across people who are motivated enough to even seek you out and go to a meetup, and that's unique in itself.
For sure.
And out of 100 people, what percentage of that is, I don't know. I'm hopeful that it's a greater number than I would expect, but
sadly we can't save everybody. It's kind of like the Titanic.
No,
you're going to have to do your own research, and you're going to have to educate yourself, and
these conversations are going to have to seek it out,
right? Yeah, exactly. I mean, hopefully this will reach tons of people, and they'll maybe some new people, they'll fall down the rabbit hole and start to, what is all this about? I just want to learn about options, but with Bitcoin, let's learn about Bitcoin, right?
Exactly. That's definitely.
What are your thoughts on Bitcoin's potential to disrupt or replace the US dollar as the global reserve currency? Right? We think endgame. For me, I think this is inevitability. Yeah. I think this will be this like global reserve asset. And I think, for me, that's an inevitability. But what's your opinion on that?
This is
timeline.
This is just, you want to talk about mind expansion, and this is the crux of it. Like, if we're going to change the system, it's not just going to be within the confines of the lower 48 and the other two states that are part of our country, right? It's hopefully going to be a global impact. And as the world we live in today, post World War II, the de facto asset to settle international trade is the U.S. dollar, and largely because of the last major world war, we came out on that winning side of it, and our fiat currency was chosen as the bearer asset for settling international trade, right? And we're still living in that post World War II regime, and obviously the world's a much different place than it was in 1945. But that fundamental structure has held true, and a lot of it comes down to the military dominance. When you talk about the world reserve currency, you're talking about the asset that most commodity producing countries have agreed to settle transactions in. Okay, and then what is the foundation of that system to allow for the free flow of goods? It's the shipping and the transportation routes. And those routes are defended by the military. And in today's world, that military backbone that defends the commodity shipping routes and trade routes is a westernized military. It's a U.S. dominated military approach, right? And then you talk about the emerging economies like China, like India, like Brazil, like you can say a couple more. Those companies have benefited from these shipping routes, and they've benefited from the reallocation of labor and where capital is deployed for different types of commodity production. But the military that supports that free flow of trade can only be sufficient as long as that military is not impeding these commodity producing countries and threatening these commodity producing countries. And one of the externalities of this global world that we've set up, this international trade and transfer that we've set up, is that we have empowered some rivals, quite frankly. And you can look at China as the number one example. There was, when I was a kid and I had a dinner plate and I couldn't finish all the food on my dinner plate, my parents would often say to me, "There's starving kids in China." Okay. That was like a very common phrase. And if you look at the economic data, there were a lot of starving kids in China.
Oh, for sure.
Okay. But in 34 years, that country has become a behemoth.
Yeah.
The economic growth that was facilitated by the reallocation of labor and capital and the free flow of trade that was defended by westernized military alliances allowed that country to just become a behemoth and a world player. And then there's other beneficiaries as well. I've already said a couple of the names, and the other names. And Russia is a big one on this number, right? So now the question is, the playing field, this financial and commodity and international trade playing field has dramatically altered since 1945. And the question is the United States military operating in a capacity that would say to these other powers, we're fine with the current setup. We don't think the military, this westernized military, is impeding on our power or trying to regime change or trying to do things that are devious in a sense. And we're fine with living in this dollar denominated world. That's the shipping routes are protected and everything's great, right? That's not the case, as we talked about on this show, and you brought up. No, the United States and the Western allies have been involved in numerous regime change efforts all over the world. We have invaded countries. We have
the propaganda machine wants you to think it's just black and white. But
yes,
there's a lot of gray. I mean,
sure.
Are we, historically on the good side more than not? You could make that argument. You could say yes, we are.
100%.
That being said, the road to hell was paved on the best of intentions. Wow, we've seen that play out.
That's beautiful. Beautiful way to really say what I'm trying to say. And I'm not standing up here as an antagonist to the United States. The United States is the greatest country in the world.
Of course, no doubt.
Period. Okay. Not even, depending on you, not even close, right? Okay. But the power dynamics have been misaligned. And we have witnessed for the past 30, 40 years that maybe the too much power in one country's hands leads to devious action and destabilization efforts. And, those who want power are the least deserving of power. And we've witnessed that in real time, So that leads to the question of, will Bitcoin replace the US dollar as the world reserve currency? And so that's the first thing you have to ask is, why would the dollar get replaced? And we've just covered that, or my opinion as to why it would get replaced has been covered here. And then the question is, okay, so what can be most efficient use of an energy transfer mechanism that can settle international commodity trading deals? We've talked about the efficiency of a Bitcoin settlement transaction, right? We've talked about the idea that Bitcoin is for everyone and it's not controlled by anyone. Okay, so just on those 2 points alone, wow, this is actually an interesting technology that might be a world reserve currency. Why? Because it's available to everyone. It's not controlled by anyone. It's very efficiently settled. And the idea that there is no central authority can allow and be a catalyst for countries that are maybe at odds with each other about
it's just
other
a fair
things.
System. I mean, at the end of the day, it's just a fair system, right? It's like,
so
the rules of the road are the rules of the road. They're enshrined in code. It's totally decentralized. I mean, it just makes sense. I mean, and I think it is an inevitability that that's the global reserve asset currency of the world in the future. Now, there's a world where stablecoins and, fiat currency still exist within that, thing. But I think Bitcoin forces a fair world in the sense that if someone is to hold dollars or hold euros, they're not going to hold euros if the government's just printing them and basically debasing them.
No.
They better be getting something for that.
That's right.
Whether it's, auto bond APY or, I don't know, other ideas, maybe some kind of NFTs or who knows, right? There's so many different aspects of things you can do. Maybe if you hold X amount of dollars, I mean, these are just some crazy ideas that I come up with. But hey, if you hold $100,000 of stablecoin in this wallet, you have access to national parks for life. Just like little different things that are kind of like, oh shit, I might hold some euros. If now I can visit all these historic sites. If I have 50,000 euros in a wallet, I get this NFT that allows me to access all of these. I mean, you know what I'm saying? There has to be a value there. There has to be some value prop. It cannot just be a one-way relationship of exploitation where, the American citizen is constantly busting their ass working. This energy transfer, they're getting paid in energy for their time, and it's just this one-way street of just extraction that we see today, right? They better be given something back. There better be a value proposition there, and I think, governments around the world are going to have, they're going to have to be efficient, and they're going to have a hard, conversation about this because people have an opt-out now, like you mentioned. Bitcoin is this opt-out of that system, right? To hold Bitcoin, you are no longer subject to the whims of all these nation states just exploiting their citizenry, right? Government will force to be accountable, force to be efficient. And if there's not value in the services provided, then those services will no longer be funded.
That's right.
Because guess what? You can't print more Bitcoin,
That's right?
You cannot print more Bitcoin.
And you cannot. Amen.
Yeah, amen. Amen.
I mean, that is the right way to say that.
Yeah. Off the cuff a little bit, but it's the facts.
Exactly
right?
it.
we talked a little bit about the regulatory landscape with the SEC. What do you think here? What needs to change? What needs to happen? What do you think is going to happen over the next, couple years?
Yeah, we need to decide who is going to be the main regulator on this asset. And is it going to be the Commodity Futures Trading Commission, which that seemingly is the appropriate legislative tool to use?
Seems to make more sense, at least
seems
for
to
Bitcoin.
make more sense for Bitcoin, especially. And then
probably most other cryptocurrencies.
What other assets? And then how do we define what gets regulated by the CFTC, and how do we define what gets regulated by the SEC? And that's going to be a massive amount of political will to come up with those definitions. And until we do, we are operating in the dark, quite frankly. Yeah. And it will remain a tool for those currently in power to continue the fight against the industry. And they will prolong the ability to have that tool to fight the industry as long as they can. But the big one for me, to say it again, what falls under the jurisdiction of the Commodity Futures Trading Commission? Is it layer one assets? Is it what? Who knows? Whatever. And then what comes under the guide of the SEC?
So, and again, let's bridge into this because you mentioned other assets. What are your personal thoughts? Are you a Bitcoin maximalist? Do you see value in other crypto assets?
Yeah.
I mean, for me, Bitcoin is like this idea of like this decentralized money. And I think money is like super fucking important. Like it's everything, right?
Yeah.
But it's not. It is everything, and it's also not everything. Like there's other things that I think are cool, like
definitely
video games and NFTs and all this stuff. Like doesn't necessarily like if you like a piece of art, etc. That's your opinion, and that's you may find value in that. Someone else may not, but value in a lot of ways is subjective, right, to the individual. And there's just people like play video games, and you don't necessarily need blockchain, Bitcoin's ledger to store NFT assets from video games.
That's
you can
right.
use a less decentralized ledger to do that, right?
That's right.
These are the arguments I come back with, that money it's very important and it's crucial, but it's not everything, I guess.
Yeah, and this is where I try to I've listened to it. I came into the industry as a Bitcoin maxi. And it just made sense to me. I got it. You did the work, you do the time, you listen to enough smart people talk about the subject, and you kind of cross that Rubicon and you get it. But then I was introduced relatively early on to programmable money, Ethereum.
Yeah.
Okay. And thinking of this idea of a global settlement layer where it was not just the underlying network asset that could be settled, but branches of assets from application layers that could be built on top of this global settlement layer, and with human creativity and ingenuity. Why would we want to limit some of the best things about our human nature, which is the ability to think and design and grow and be creative and build stuff, right? So wrapping your head around that global settlement layer of Ethereum, and then think about the application layer, what can be built on top of that, and then it would be really hard pressed to call myself a Bitcoin maxi. I'm not. We're too early in this technology to call winners and losers in a sense. I think Bitcoin is at this point the network
for
effects.
Me is like for Bitcoin for money is like that's the use case.
That's the use case.
There's no changing that. I mean, like Bitcoin first, understand that it's super fucking important for all of the geopolitical and
everything we've talked about.
Yeah, but there's there's other assets that I think are useful and cool and fun to play with.
100%.
And maybe necessarily I'm not thinking about them as like storing my wealth and money.
Sure.
I'm thinking more of like maybe a digital oil or digital gift cards or video game stuff. Or,
definitely.
Smart contracts for say I'm doing some DeFi stuff over here, and I make a big profit. Okay, I can move that to Bitcoin, but that was useful to use. And like stuff like Ethereum, maybe it's changed from proof of work to proof of stake. Maybe it's not as decentralized as it once was.
Yes.
But is it sufficiently decentralized for the activities that I'm doing on it? Yeah.
And I'm not even so sure that we even need, because if we're going to make a distinction between what Bitcoin is and we're going to say Bitcoin and then blockchain, do we need that proof of work, rock solid, decentralized infrastructure for some of these other blockchain layers? I don't know if that's really the case.
We could record a whole podcast on that because
exactly.
I'm biased towards proof of work as a miner, but I've just seen how it distributes supply to all of these people instead of like with proof of stake. It's like you own all the asset, you're going to sit on it, hold it, and you don't have to do it. You just the stakers make the rules.
Sure, and that's a whole.
It's kind of like the current system we already have, which kind of works, but
I think
it uses less energy, which is the argument, right? But
definitely, but I think you and me might come to consensus on the idea that with technology and the exponential growth curves of technology, we're just way too early to make it to say, nope, that's it. We're going to stop.
I like the idea of a free market playing out, and you have different use cases, and you have different, mechanisms like proof of work, proof of stake, proof of space time, proof of humanity. Like let all these things play out. Proof of storage, right? All these different things. Let them all play out. They may all have their own use cases for things. I think Bitcoin is extremely clear to me with this use case for a decentralized global money, decentralized system. Max. I mean, it works and it's beautiful and it's incentivizing energy markets. It's doing all these amazing things. We didn't even go down that rabbit hole, right? Let's go down that rabbit hole. What are your thoughts on energy markets? That's your background, right?
Yeah, that's the background. I mean,
so tell me.
Well, that's what helped me conceptualize Bitcoin. I mean, the at the end of the day, Bitcoin's a battery. Bitcoin is an energy storage and transfer mechanism that's controlled by no one and accessible to everyone in a decentralized fashion, right? That's unconfiscatable, not your keys, not your coin. That's Bitcoin. Probably the most interesting metric talking about Bitcoin is looking at net electricity consumption on a global scale. And if you see that number start to tick up, that's going to come right back to the price of Bitcoin, because if that consumption number for net electricity increases, just supply and demand fundamentals, the cost of electricity is probably following that supply curve. And if that cost of electricity is following the demand for electricity, that cost to mine is going to be impacted, right? And that break-even price to mine is going to be impacted. So I think understanding that input for Bitcoin mining, and you can speak on it, much more in depth than I can, understanding that input cost and the function that it relates to the break-even price for a miner, that to me is a great indicator for price.
Interesting. Have you been up to speed on a lot of the green projects that are being basically funded and financed by Bitcoin miners, like Gridless in Africa and stuff like that? Have you followed a lot of that?
Yeah, what I'm following a lot is the shale gas. You got stranded natural gas, and you can go capture that wasted energy, and you can build out data centers. And maybe Bitcoin mining is not the only component there; it's a data center for something else too. But the Bitcoin mining is that initial investment that allows that data center to be purchased, and that's interesting, right? And then also you talk about demand response mechanisms where you get a grid, like this is a big one in Texas, where you have Bitcoin mining operations and they have a deal with the electricity grid.
We participate in that in North Carolina. So
thank you very much. Okay, because this is actually such a fact. If the demand on the grid becomes elevated for some reason, it's very hard to bring new electrons on the grid quickly. Of course, you got to spin up a peaker plant, usually natural gas powered. It's not instant, and the way electricity grids work, which I'm sure you know very well, is that supply must always equal demand. If you get an imbalance, you get a blackout. So how do you keep grids stable? And this is where we used to think about this in terms of batteries. Okay, we can have these micro grids, and so, right now we have these big grids. They're one concept is we can make these micro grids where they're sectioned off, and you can isolate blackouts, and you can support micro grids easier and more efficiently than a macro grid and whatever. But to zero in on Bitcoin, Bitcoin becomes a battery in a sense, because if you have mining operations that are on your grid and demand spikes, you can go pay that Bitcoin miner to turn off.
Yeah, it's
stop demanding electricity and keep that grid in balance, right?
Yeah, it's
while you set up a peaker plant.
Yeah, I mean, mining is one of the very few industries that exist that can literally respond within seconds to a demand response like that. I mean, and I think that the market is still I don't think that the utilities have really caught up with, really the level of demand response they could have. Like with Duke right now, it's very preliminary. It's and it's good that, they'll let us know in advance. Hey, today's going to be a bad day. You're on standby. We might need it. We might not need it.
Yep.
And then they'll give you a 30-minute heads up.
Yep.
Where, hey, and we're going to curtail at, in 30 minutes or it is in fact a curtailment event. You have 30 minutes to do this or whatever, or an hour or two notice. But where I think the real potential is for them is to literally, I would do a plan with them where they could have control of the power and shut it off themselves if they needed it within a second response.
Sure.
Hey, give me a slightly little bit better rate and I'll give you the keys to the kingdom.
Yeah.
So you'll know exactly how much you need to turn off, how much you need to turn on. You could actually just press the button yourself. Oh, I've got 5 megawatts or 2 megawatts over here, or 5 megawatts over here. Oh, I can just, there's a hospital over here in need. It's super hot. The AC bill went up.
Yep.
And I spoke with, I think it was Mark Artimko from Ocean Mining. He was here the other day, and we talked about this. He was one of the guys in those control rooms in Canada, probably like 10 to 20 years ago, maybe. And he said that like the ability to do that would be super useful, right? So like, because they literally have people in these control rooms like, hey, are we going to have an emergency here? Are we going to have an emergency there? What's going on? We got to keep this grid in balance.
Yep.
And for those black swan events or for those times, I mean, I would be more than willing to literally give Duke the keys to the kingdom, these utilities, and just say, hey, if there's an emergency, just press the button yourself and shut it off within seconds. You don't even need to ask me, right? Give me a slightly better deal on that curtailment plan. Have a couple different curtailment plans. I'll pick the one I want. Of course, the one we're doing right now is still useful, right? We curtailed a little while ago, and there's a lot of stuff going on. But yeah, I mean, there's a lot of potential there.
This is, aside from what Bitcoin can do and everything we've talked about, from a societal perspective, you talk about the electricity grid, and like that's the fundamental commodity that makes this modern world work, right?
Yeah.
Electrons.
Yeah.
And we live in a world where we just take it for granted.
Yeah.
We most people in the United States don't live in a world where there's going to be a blackout maybe this week, and how do we prepare for that? And most people have never really experienced blackout aside from like a massive storm or something like that. Just your day to day. Electricity is taken for granted. So when we talk about like Bitcoin as a tool to optimize our electricity grids, it almost comes back to like people not understanding why we need an opt out of the dollar, because we live in the dollar system. We earn in dollars. It's not like we're living in a hyperinflated economy like Argentina or somewhere with real problems today. It blinds people a bit to the value of Bitcoin in the exact moment.
In these first world countries, especially.
Yes, and
there's other narratives like this that can really show the value there.
Yes, and it's almost a similar blinding effect, though, because our country is very accustomed to a very sturdy grid. And so when I say to you, Bitcoin can help stabilize power grids, as someone in the United States, they might say, well, who cares?
Yeah.
What work do we need to do there?
Yeah.
And it's like, no, there's a lot of work that needs to be done there, especially over.
It goes even beyond that. I mean, like just literally entire communities that would never have access. Like this, I just got back from, I was speaking at a mining conference in Minnesota, and they showed Dirty Coin was a documentary that I don't know if you've seen it or not, but for our listeners, if you're really interested in this topic, there's so many rabbit holes to go down, but it's a great documentary. It really shows, this inaction. Hey, there's entire towns and villages in these remote areas that have no access to power, no access to basic utilities, for women and for children and for all this stuff. They can't have a light to read at night. They can't have bathroom facilities. I mean, clean water to light fires. I mean, it's like, it's crazy, right? But this idea of a Bitcoin miner coming in and saying, hey, if you build that power plant there, I know the community that lives there might only use 10% of it. Yeah. Guess what? I'll use the other 90%, and I'll pay you 24/7. Go build it right now, right? Yep. So we're seeing this happen in Africa in a major, major, major way right now. I think one of the companies doing it is called Gridless. I think that's their name. But wow, I'm getting the signal from Paul that we got to wrap up here to go to dinner. But any closing thoughts you have, John?
I mean, look, this is one of the best conversations I think you could have on Bitcoin, because we talked about, we started with talking about options contracts, right? And why that's interesting. But then, of course, we got to get into the meat of this. Why are we here? Why are we talking about Bitcoin options? It's because of Bitcoin. What's Bitcoin? We talk about that. And we get all the way into the electricity grid. You talk about an all-encompassing conversation. I think, I appreciate you and what you do, spreading the right message and keeping people on the subject, and not, where's price going, just talking about why we're here. And I appreciate what you do, and you support the infrastructure of the network through your mining operations, and it's incredible. And just the journey and, everything that comes together from it. We need voices like you. So thank you for what you're doing. And thank you very much for having me on.
John Devine, it's been a pleasure.
Thank you.